Sandip Agarwal is joining us from Sowilo Asset Management. He's the fund manager at Sowilo. Sandeep, good morning. Thank you very much for your time. First of all, good to see you after a long time, by the way, in your new hat. So tell us, Sandeep, what is your hypothesis of the market right now? Are you cautious given the global backdrop? You know, the macro headwinds are making a lot of people nervous. Global markets are 5-10% away from 52-week high, but we have not fallen. So are we vulnerable? Should we be a little cautious and saving some dry powder? How are you approaching?
So thanks for having me on the show, and after a long time, Ajay. So as you rightly mentioned that, volatility is the name of the game and equity means volatility. So I will not say that we will not be volatile, but, we are basically, we are doing extremely well if you compare with the chaos which is there outside India. So we, if you see, there is very interesting data point. The gap between the yields in US and India is at decadal low at around 260 basis point to 50 to 60 basis points. So that is a phenomenal thing to happen. And with such low gap in the yields, with such a small difference, although there is a risk that, the FPI flows could reduce and there could be a sell-off and there could be some pressure on the currency. But on the other side, if you see, we have been quite resilient. So in my view, it is a positive sign on one front. Although, the export-facing sector is still, the longer pause or even a higher rate for a longer period from the Western markets would imply that, we will have some pressure domestically as well, particularly in the export-oriented sectors. And that is what needs to be watched. But having said so, the domestic consumption stories, the domestic building material stories, the home consumption stories, the manufacturing theme, I think those are the areas where there is quite a bit of juice, although you should be careful about the valuations you are paying for growth. So we believe that, the best way to look at the markets would be to play the themes. For example, if you are buying jewelry stock, maybe, the leader would be very expensive, but find good management, good corporate governance and good growth in something which is little reasonably priced and go for it. So that is the way we are approaching. So we are value biased with very high quality consciousness.
Sandeep, what are your thoughts on pharma? It is firing up in trade, and we saw some transactions coming in. Glenmark has done a transaction to reduce debt. Then there is rights issue of Piramal Pharma just got over. Is there merit to go back to pharma? There are triggers over there, or Window is getting, some launches lined up in October. Is there merit there? Risk-reward argument positive?
So I think, some portion of that rally has already happened. And, pharma is not like the place where today chemical is. I think that, chemical space is quite close to bottom, or the downside risk may be limited, but maybe, time correction could still continue. But in pharma, unlike that, I think there has been quite a bit of run up. So I would not say that pharma, there is a lot of upside from here. In my view, the valuation comfort is gone, but yes, earnings comfort and growth comfort, which can keep valuation high for some time, is definitely there. So new money should be deployed very selectively, in my view, in that space, because this space is also prone to regulations and US FDA and all those things. So we have to be a little careful on that front.
Okay. So where exactly would you deploy new money where you're comfortable, even if you don't expect a runaway rally right now, but in due course, at least valuation is in your comfort?
So I think, as I mentioned that, it is probably unfair to call the stocks, but I will tell you the spaces. For example, in home improvement, like, the tile space, the paint space, these spaces we will be, or even the MDF space, wherever there is, comfort on valuation. We are not chasing the biggest player or the market leader, because that comes at a very high multiple. We are chasing the second run players. Similarly, in the technology space, for example, we are not chasing the leaders because they are quite expensive in our view. We are chasing something which has good corporate governance, which good management, but likes of Tech Mahindra, HCL, Gensar, all these names where the valuation comfort is there. Similarly, in the manufacturing theme, we are chasing the names where the valuation is more comfortable than the leaders, and the growth is happening. So this is the way we are stock picking. So we are little value biased, with obviously focus on quality. And these are the themes which we are playing. We are also playing the themes like, the branded apparel space. There also we are trying to find values.
How's the earnings visibility of your portfolio? You've given us a good flavor on where do you stand in terms of your composition, but is your portfolio 18-20% kind of visibility on earnings?
So see, we don't expect so much, but we are happy with 15 to 17% kind of revenue growth, because that is something which is more logical, more reasonable, and more achievable. And I think at 15-17% growth, if we are paying 1.25 to 1.5 PEG ratio, with operating leverage playing out and challengers getting re-rated, I would say they will also do some catch up in the multiple. I think we will make decent money. So our idea is to capture things which are 15, 17, 18% kind of growth with operating leverage and margin improvement and good quality governance. I think that is the way it should be looked and portfolio should be built. And we are basically building our portfolio on those lines.
15-17% earnings growth, 1.2 PG. What,
Yeah.
where incrementally are you, the area which you are researching incrementally, which you think that has structural growth, but price may not be in your favor, valuation may not be in favor, any pullback you'll start deploying?
So we are looking very aggressively at the manufacturing space, the likes of Dixon's, Amber, PG Electroplast. We are also looking quite aggressively at the names like Kalyan, Senko, and others. We are also, looking at Jubilant Foodworks kind of names, Devyani, Sapphire. These are the names which we are looking, where we believe that the population helps us to achieve some portion of growth. The increase in per capita income also helps us.